FinanceStrategy.com.
Hello, this is a quick look at what's coming up in the markets for Friday, July 4th. We have a pretty relaxed economic calendar, but it starts relatively early at 6 o'clock GMT when we have factory orders from Germany. This is more likely to have an impact on German stocks than it will on the currency. Similarly, at 7:30 GMT, we have Construction Purchasing Managers Index, also from Germany, more of an impact on equities than it will on the currency. Construction is a key component to the economy, the German economy, and by extension for the entire Eurozone. Then at 8:10 GMT in the morning, we have a Retail Purchasing Managers Index. Retail is a key component of consumer spending. This will also be an important indicator of the overall health of the European economy, more likely to have an impact also on equities than it will on the currency. So we have a pretty relaxed day because it's a holiday in the United States with American markets closed. So we don't have, so we're looking at a relatively quiet day in the markets with relatively little volatility. The S&P 500 is continuing its move on the upside. We had some positive data coming out from the United States yesterday. After 3 consecutive record highs, we'd be looking for a correction in the short term, but the S&P 500 is closed today. Looking at some technical levels, the euro we see is continuing its drop on the downside. This is even after the ECB maintained its current policy, but in the press conference afterwards, Mario Draghi mentioned some comments that helped push this currency on the downside. And going into the long weekend, we also had some increased dollar strength as an appetite for safe haven assets, particularly considering the geopolitical risks going into a long weekend. All right, so the euro is trading above support, which is at 135.70. 135.70 is our current level of support, and resistance at 136.60. The pound, we had some commentary by the governor of the Bank of England, which generates volatility here in the pound. It poked through but didn't manage to stay below our the Fibonacci extension level here, which is our support level, at 171.20. And then above that we have our next level of resistance at 172, but we're not expecting all that much volatility given that the markets are closed and will be closing early tomorrow with the United States in a holiday. The yen, here we have strong expression of the dollar strength with this currency pair moving on the upside. We also had a correction in the topics in Japanese stocks. There is profit taking in Japanese stocks, which led to a correction in the stock market and a general weakness in the Japanese yen, which pushes this currency pair on the upside. It's trading just below resistance, here at 101.25, and then we have support at 101.75. And then finally we have gold, which is relatively unchanged, but still very close to an important technical resistance level at 1,340. And then we have a interim relatively weak support level at 1,322, and then below that stronger support at 1,310. And that's it for today. Thanks for watching and happy trading.